Australia has slammed China's move to impose anti-dumping duties on its wine. From tomorrow, China will impose tariffs of up to 200%. This is the latest salvo in a standoff between Canberra and Beijing.
This is a devastating blow to those businesses who trade with China in the wine industry. It will render unviable for many businesses their wine trade with China. And clearly, we think it is unjustified and without evidence to back it up.
Beijing says the latest curbs will protect its local industry. It says cheap Australian wines are flooding the local market, but the impact could be huge. Australia is the world's 5th largest exporter of wine, and China is its main destination. Last year, it sold $900 million of wine to the Chinese market. Tensions between both sides have soared since Australia demanded an independent inquiry into the origins of the coronavirus. China has already imposed tariffs on Australian barley and suspended meat imports.
中方主管部门依法依规对外国输华产品采取相关措施，符合中国法律法规和国际惯例。 也是对中国国内产业和消费者负责的行为。
Australian shares were under pressure following the news. Benchmark SX 200 was down by 0.5%. Shares of Treasury Wine Estates, that's the world's largest listed winemaker, was one of the worst affected, down by more than 11%. It was put on a trading halt pending a further announcement. Another winemaker, Australian Vintage, that dropped about 1.6%. Sam Moody from Cult Wines explains what's at stake for Australia's wine exporters.
Australia produces a lot of bulk wine. This is the stuff that I think China is really looking to crack down on, to tackle, and they could potentially decimate this sector of the market. It's already a style and a type of wine that's often produced and sold at break-even or worse net loss prices. These are essentially fast-moving goods with short shelf lives. They rely on quick and ultimately seamless movement across borders to exist, to make any sense of commercial viability. So this part of the Australian wine market, I think, is going to be massively impacted negatively.